proposed bridge to London for Chinese investors is nearly finished. The Chinese government has released draft rules for a link between the Shanghai and London stock exchanges. Officials say the launch of the project, first announced in 2015, is imminent. The link will allow Chinese investors to buy London-listed shares and give global investors unprecedented access to mainland Chinese stocks. Regulators want the link up and running by the end of the year, as part of what UK and Chinese officials describe as a golden era in bilateral ties. It aims to build on the success of the Hong Kong-Shanghai Stock Connect, launched in 2014, and the 2016 Hong Kong-Shenzhen Stock Connect. Those links led to a net inflow of $101 billion of mainland money into Hong Kong stock markets as of June, and $74 billion in mainland shares have been bought by investors through Hong Kong brokers. Those numbers are expected to continue growing as Beijing works to further open up the Chinese economy to the world. With China's GDP expected to grow by 6.6% this year, better than the projected 3.9% global average, investors may view the London-Shanghai link as a bridge worth crossing.
Joel Flynn has more from Hong Kong.
Well, the new Stock Connect programme linking London with Shanghai certainly looks promising to investors, with more than a hint of allure to politicians in the UK, no doubt, as well, ahead, of course, of Brexit. The British capital, though, isn't the first to trial this type of link with mainland Chinese markets. Of course, Hong Kong's own Stock Connect programme with Shanghai has been running for 4 years now, and it's been pretty lucrative. But as far as Beijing's concerned, it's not just the money that is attractive, but also what they could do to the legitimacy of Chinese markets themselves. But some have questioned really why this new link is needed. It only actually allows certain types of asset investments, in this case equities, and there are also some big differences in the types of open, transparent markets that exist in Hong Kong and London compared to, for instance, Shanghai, and of course the rules governing them. Some have also raised questions too on how lucrative a link with London this new Connect programme is likely to be, particularly when Chinese investors have often seemed less enthusiastic about foreign stocks, for instance, than they are about tangible assets like property. And likewise, international institutions looking to move money into China can already do so via Hong Kong. So London really doesn't offer anything new on that front. Now, furthermore, this whole exercise really also serves as a reminder of the tight capital controls that Beijing still has in place, because if it didn't, then this type of program wouldn't actually need to exist at all. So some analysts have said that, if anything, all a new Stock Connect scheme will actually do is show that fundamental barriers to further investment flows in China are going to remain.